Imagine working at a job where you get advance notice of major decisions that can move markets. Interest rates, regulations, investigations, and then being told it's perfectly fine to trade stocks on the side, as long as you file the paperwork later. That gap between power and restraint is what this moment is really about. Not ideology, not party, trust. The Pelosi Act hearing puts a long-running discomfort into plain view. Lawmakers writing the rules of the economy while personally participating in it. The exchange matters because it forces Congress to confront something voters already assume, that the system quietly benefits the people inside it. Senator Elissa Slotkin lays it out plainly. She says, "The perception is that politicians, regardless of party, are using their positions for personal gain through stock trading." That line lands because it doesn't accuse anyone of a crime. It does something more damaging. It describes a pattern. For most Americans, perception isn't abstract. It shows up as higher prices, stalled reforms, and the sense that rules are enforced differently depending on who you are. When voters hear that members of Congress made hundreds or thousands of trades while shaping policy, they don't need proof of insider trading to lose confidence. The incentive structure alone is enough. What's notable is how the system responds. The bill allows long compliance windows. Senators can wait until the next term. Illiquid assets are exempt. Blind trusts are encouraged, not required for everyone. Each accommodation sounds reasonable on its own. Together, they reflect institutional self-protection.
You would have 6 years to comply. This is the same treatment for all office holders. Members of Congress, members of the House, it will take effect upon the beginning of their next term if they're reelected. Members of the Senate, it will take effect upon the beginning of their next term if they're reelected. The President, the Vice President, will take effect upon the beginning of their next term, and so on. So everyone is treated the same in that respect. They're allowed to come into compliance. And that speaks to the blind trust provisions. If you currently have a blind trust and you are a member of this body, you have until the beginning of your next term and then 180 days after that to meet the divestment requirements. Okay, I yield back.
Thank you. Sorry, that's my mistake. I think we have to accept that the American people think that all of us, Democrats and Republicans, are using our positions and our access to enrich ourselves. They think that when it comes to stock trading, and as you pointed out, Mr. Hawley, Democrats and Republicans, right? Just right now around Liberation Day, President Trump's big tariff day, 53 members made over 2,200 stock trades valuing at $34.9 million, between $34.9 million and $140 million. So it's happening on both sides of the aisle. And people don't believe that we are here for the right reasons. We have a problem. And in order to address that, I am willing to make the good work instead of waiting for the perfect. So of course, I want the president and the vice president to be held accountable under this. Of course, we saw that you made changes so that it affected their next term, knowing that that probably wouldn't be Donald Trump. We all saw Vance and Trump come out against this publicly. But I think it's important that we at least make a start. And you're right, there could be judges and chiefs of staff and all kinds of other peoples. But right now, this body has the opportunity to make the call on this body and a few other really important holders. I would also add the fact that cryptocurrencies, digital currencies are in this is hugely important when it comes to curbing people like Donald Trump, who's made over $100 million since taking office from crypto. So if you don't want to vote this way, if you don't want to vote for this, don't say it's because we're protecting Donald Trump. Say it's you don't want to be held accountable in your own office. It's you don't want to have to sell your stock. And I actually respect Mr. Johnson for saying that, for saying this is why I think it's bad, because people won't be able to earn money. I think that's a legitimate reason for this. But don't say that you're going to hold out for the perfect when we have a chance to actually send a message that we understand we have a perception problem and members of Congress shouldn't be trading stocks when they're getting classified briefings.
Senator Johnson.
Yeah, Mr. Chairman, I do want to point out that when I decided to run for the Senate and I won, I sold all my marketable securities. I converted to cash. You know, that hasn't done real well in terms of investment. Now, my wife has, in the intervening years, bought a few ETFs. So I agree with the spirit of this. I don't think members of Congress, in my own case, I don't trade stocks. But if I would, it's fully disclosed, and I don't want to impose that on the members either to discourage people from the private sector to come here and serve. Again, we have too many career politicians. We don't have enough people who have experience in the private sector. We need more. We need to encourage them, not discourage them. This piece of legislation would be hugely discouraging to people from the private sector coming here and serving.
This debate isn't about one bill or one set of names. It's about whether Congress believes public trust is fragile or expendable. Markets can recover from bad policy. Democracies struggle to recover from the belief that the game is rigged. The longer lawmakers treat that belief as a perception problem instead of a structural one, the harder it becomes to convince anyone the rules are written for the public, not the people writing them.
You may be paying $80. Last thing, Mr. Chairman, I know you're indulging me. I'll be really quick on this, but Mr. Schroeder, you just mentioned that you also use this so-called dynamic pricing for seats, for seat fees. Why do you make people enter in their age and their geographic location and their gender before they can even see the cost of a seat?